Many people might forget about this. If the oil crisis in the Middle East keeps going on and causes a global energy shortage, it's definitely going to change the future of AI and our economy. To be clear, it's not that the AI servers will just disappear. It's more about the cost of power going through the roof, and it becoming way harder to get the energy needed to run everything. First, AI will get super expensive. The capital expenditure of the tech giants will definitely increase even more. Even though we don't burn much oil to make electricity, but because our daily life power supply is still heavily dependent on oil. When there's a shortage in oil supply, we will tend to shift to other sources like gas and coal or nuclear power, pushing their prices to be higher as well. This causes running and training models like ChatGPT to cost even more. At this stage, you can't shut down everything, like the model training, the servers, and etc. Now only the big tech companies are able to pay the bills. Small AI startups might go broke just trying to pay for the cloud computing. Data centers usually have backup generators, but those run on diesel, which comes from oil. If oil supply keeps dropping, those backups will not last very long. Some data centers might even be forced to slow down or shut off to save the power grid. So if you are holding any AI related stocks since 2023 and already have profits, you might want to liquidate some to avoid the increasing risk. And in a worst case scenario, some countries might have to ration electricity usage because most Asian countries are heavily dependent on oil. And now the rule for AI is going to change. It's not the bigger the better. Instead of massive power hungry models, companies will focus on small language models that are efficient but still smart. Chip making companies like Nvidia will stop bragging about raw speed and start bragging about how much work their chips can do per watt, focusing more on efficiency. Your phone and laptop will do more of the thinking locally, so they don't have to talk to the power hungry cloud all the time. This oil crisis will also make tech giants ditch fossil fuels even faster. They will build data centers in places like Iceland or Northern Europe where there's a lot of natural cheap energy, like the wind or volcanoes. Microsoft and Google are already looking at small nuclear reactors. This crisis would make the move even faster. And now let's look out for some investment or trading opportunities here. Logically, this is a huge win for the nuclear sector in the long run. From a market perspective, this isn't just a quick reaction to an oil crisis, it's a structural shift. The bottom line is AI runs on electricity. Tech giants need power that is steady, clean, and reliable. Right now, nuclear energy is the only thing that perfectly fits that bill. If oil prices spike, nuclear power becomes even more attractive and strategic. If you are looking to play this trend in the market, here are the three main layers of the trade. First, the big utility companies. These are the companies that already own and run nuclear power plants. Tech giants like Microsoft and Amazon are already signing massive long-term deals with them to power their data centers. Once a nuclear plant is built, it's cheap to run. Unlike gas plants, their costs don't jump just because oil prices go up. These stocks are relatively safe with steady cash flow. Secondly, the high reward, small modular reactors are the tech startups of the nuclear world. They are smaller, cheaper to build, and can be placed right next to a data center. Leaders like the OpenAI and Microsoft are already betting big on this sector. An oil crisis makes everyone want this tech now rather than later. But these stocks swing wildly. They aren't making huge profits yet, so they behave more like a high growth tech stock. Great for option trading if you like volatility. And lastly, the direct play, uranium. If you don't want to pick specific companies, you can just trade the raw material, uranium. For years, nobody was mining much uranium. Now, suddenly, everyone wants it for AI and energy security. There's a massive shortage, and when demand stays high while supply is low, prices shoot up. You can trade it through uranium ETFs or futures. It's a classic supply and demand play. But be careful, commodity prices can be a roller coaster. But there's one big red flag to watch out for. Even if this logic is perfect, nuclear power takes a long time to profit. It takes years, sometimes a decade, to get permits and build a plant. The market might get super excited and drive prices up, but then get bored or frustrated when the actual results take years to show up. The US government is basically stepping in to put nuclear energy on the fast track. This is a huge deal for a few reasons. The Republican administration wants to slash the crazy amount of paperwork and red tape at the nuclear regulators. For small modular reactor companies, this is a real lifesaver. It means they can hopefully start building in years instead of decades. Right now, a lot of enriched uranium comes from Russia. To fix that, the US is going all in on supporting uranium mining and fuel processing at home and in allied countries like Canada or Australia. This isn't just a nice to have action, it's now a matter of national security. That means more government funding and faster permits for the entire nuclear supply chain. So these are the potential trading opportunities to look out for. And like I said in my previous video, we are entering a new death spiral. The energy crisis is just worsening it. Now AI is already replacing a significant amount of human jobs. Remember, our whole economy runs on increasing spending power. But now, the average individual spending power is decreasing overall. The capital expenditure of the tech giants also keeps increasing. They have to lay off employees to cut down costs, which worsen the spending power. We might see massive credit defaults afterwards, which will cause a liquidity crisis to the market. There's a small financial crisis going on quietly, which I mentioned in my members video. I have covered every aspect of the important weekly market updates to watch out for my members. By the way, I'm not trading oil because it's a highly manipulated commodity. The risk is too high. If you are confident enough, you may do so, but I'm staying away from it. I will explain more details in my membership videos. By buying me a cup of iced latte, you will be getting weekly important market updates, as well as my monthly trading performance reviews, with my trading thoughts and insights provided. I personally still positive in the long run, but there's a storm on its way now that we all need to watch out for. Get prepared for it early, and good luck, everyone.